Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for October 28th, 2018. I hope everybody's having a great weekend, and I've got a few things that I need to discuss about the dollar this week. But before I do so, I just wanted to make sure that I mention, if you haven't signed up for ForexAnalytix, it's only $1 to try it out. $1 for 10 days. You can see it right here, $1 for 10 days. Just click sign up today, and once you do that, make sure you download the mobile app, and you can also download the tablet application. So this way you have our analysis, our chat rooms, our private chat room, our analysis pushed to your location, no matter where you're at. And that's important as a trader, is being able to be mobile, but also being able to be in touch with the markets. So that's what ForexAnalytix does. So make sure you take advantage of everything that we have over the 10 days that you try us out. Okay, now let's talk about the market itself. And before I get too deep into the currency market, I have to say that it's still really choppy out there. I've been complaining. I guess complaining would be a word you'd use to describe what I've been saying for the last few weeks. Finding direction in this market has been very difficult. It really has. I mean, we have the dollar, starts to look bullish, then it reverses, then it starts to look bearish, then it reverses, and making heads or tails, especially if you're dealing with the euro specifically, has been a little tough. You can see here in the euro dollar we have this, a little. It's not even ABC D correction, because that would take us down to 113 here, but we did get a reversal on Friday. On Fridays, the price action did reverse. I think we have to see above 114.50 to really scare any bears in the market right now, but it's not the problem that we're seeing here price action wise is it's not just the euro. It is it's a lot of different currencies. I mean, if you look at the cable's giving you a very similar type of situation where you have this if you're a harmonics guy, that might look like a bat or a Gartley, but we reversed at 128, which was pretty key. You can see this little trend line that comes through here, right? It would come all the way through. If you just extend it all the way down, it would take us right to 128. So we are finding some support here, but with everything that's happening around Brexit and Prime Minister May and inside of her cabinet, the disagreements, it's hard to get super bullish the cable. However, we could obviously see a short covering bounce back towards 130. That I don't think is out of the picture, especially when, again, this is when you start looking around at the dollar and you start seeing what it's doing against other currencies. Take a look at the Aussie. Okay. The Aussie, which I think is a very interesting chart. We had a false breakdown on Friday. Do you see that? This is a long lower shadow doji. Now, those typically will yield you a move in the opposite direction. So that means that with the long tail here, it should yield some upside. It's not as powerful as like a hammer formation, but when it's coming off of a low and you made a false breakdown, I wouldn't want to be short the Aussie looking at it. And when you take a step back and you look at the macro backdrop behind what's driving the Aussie lower, especially the trade war in general, it's hard to be bullish, but price action suggests that I don't know if I'd really want to be bearish down here. To really freak out anybody who's bearish the Aussie, we would have to clear 71.50. And that's this resistance zone right through here. You can see it, but we are a little bit of distance away from there. But I'm not saying it's not out of the realm of possibilities of reversing. So keep an eye on the Aussie. Very similar situation with the Kiwi. The Kiwi has been performing better than the Aussie. Let's go over to the daily. It didn't hit new trend lows. Like the Aussie hit new trend lows, the Kiwi did not. Now, the Kiwi also put in a long lower shadow doji as well. The risk is if we break back above 66 cents. If we break above 66 cents, you're going to see a squeeze here. Again, I from a macro fundamental standpoint, I don't see that happening, but things can happen where risk appetite in equities, maybe we'd bounce, and that's entirely possible. Let me take you over to the S&P here. I want to show you really quick the S&P, and we had this possible ABCD correction that would take us all the way down to the this longer term trend line. Let me show you. Let me reset that chart. And this longer term trend line goes all the way back from the lows in 2016. This you could argue this trend line here was touched really close, okay? Really close to being touched. And it's also close to 78% retracement. So, and also take a look here that we hit a new trend low on Friday, but we closed above the lows, which is a false breakdown. Now, does that mean you should be long equities? I think that's a dangerous proposition. However, let's say that the equity markets get a recovery rally. We get some sort of bounce going back up towards, let's say 27 and a quarter, or maybe 2750, or maybe 2800. If the equity markets recover, that's when you start looking at, pairs like the Kiwi and saying, okay, well, is it impossible for the New Zealand dollar, to break above that resistance? Or, if you're looking at the Aussie, could the Aussie take out, this resistance zone and go see the channel resistance, back at 72.50 or so by the time we get there? Those are possible situations. One last thing I wanted to cover while you're looking at ForexAnalytix, let's take a look at the US dollar Canadian. Now, the US dollar Canadian, you'll notice that we had this false breakout above the resistance. This is channel resistance, right? You can see that false breakout. And it looked pretty scary. I mean, if you're short, I wasn't short the dollar Canadian, but on Friday, before the market, the North American traders came in, we were trading well above 131. We were trading at like 131.40, 131.50, and it looked like it was breaking out. But by the end of the day, it ended up being, again, another false breakout. So being long the dollar at this moment, you would think that if the stock market continued lower, or at global equities continued lower, the dollar is going to be the grab that safe haven bid. But you saw the false breakdown in the S&P. That could lead to some dollar weakness, and we're seeing it. We were seeing it manifest on Friday. Whether or not it carries through this week, we'll see. Okay, now speaking of this week, there are some pretty important things happening this week. We have a couple central banks meeting. We have the BOJ on Tuesday night for most of us, but Wednesday morning if you're in Japan or in Asia. So we have the BOJ. We also have the Bank of England. Their rate decision is Super Thursday, so it's going to be on Thursday morning. And then we also have employment data from the US and from Canada this week. So it's going to be a pretty busy week, chock full of a lot of data. And I'll tell you, I think that the dollar is still very choppy. You have to be careful if you've been riding the dollar. Oh, I guess I'm going to take you to one more chart really quick. Just my view of the dollar index. You'll notice the dollar index, we came really close to I'm actually going to zoom in a little bit here. We came really close to the 161% extension of this last move. Okay, also near trend highs. But what we did on Friday is we posted a pretty big reversal candle. This is here, let me get rid of these trend lines really fast. I can always put them back in later for myself. Kind of a shooting star reversal, dark cloud cover, whatever you want to call it from a candlestick perspective. It is a reversal candle, and it's not an outside day, but it's more of shooting star-ish. But that long wick, the big black body, that should lead the dollar lower. And then and if it does, when I say lower, maybe come back and retest this trend line. But if it does, the bigger picture here, and I think what we have to keep in mind is we have a lower high. So we do have higher lows, okay, but we also have lower highs. So that speaks to me more consolidation before we see a bigger breakout in the future. Whether it's going to be an upside breakout or a downside breakout, it's hard to tell technically when you're in a consolidation, and I, nor anybody else can really see into the future. So obviously, some macro event or some technical event with an asset class is going to drive the dollar one direction or the other. When we break out of this consolidation, there probably will be a catalyst. It's very rarely just technical. It's usually technicals line up with the underlying theme of the market, but we don't know what that is right now. But I'll tell you that the dollar looks like it's still consolidating. And if you're long and you've been long for the last week and a half, you gotta be a little careful here. You got to be a little careful going into this next week, especially with the jobs report coming up. So guys and gals, if you found this video beneficial, make sure you click the thumbs up button. Give us a little thumbs up on YouTube, and this makes myself and the team who edits this, and we put this together, throw it in our free newsletter every week. It just motivates us to continue to do this for you. So click the thumbs up, and if you miss some of our interviews throughout the course of the week, make sure you subscribe to our channel, so this way you don't miss all the great interviews that Dale Pinkert does with so many market experts and industry experts. They're awesome interviews, and I personally can't listen to them all either. I have to go back and listen to the recordings, and then also, if you're utilizing ForexAnalytix, then we have all of the videos on playlists on our website as well that you can access. So make sure you do so. Guys and gals, my name is Blake Morrow, and I'm with ForexAnalytix. I hope you have a great trading week this week. And for those of you that listen to the Face webinar every day, I'll see you tomorrow morning. Have a great one.